Right.
Once it becomes ingrained in you, it's like just another day.
Yeah, I've had a day off, and I've been like, what the hell am I supposed to do? I know I'm supposed to be doing something.
Right.
I get confused when I don't have to work.
Right. Make sure your phone's on. Maybe we'll get a question in the inbox.
Okay.
All right, 2 minutes.
All right, brother. Hey, we got Nikki, Paige, Carl, Mark, not Karl Marx. Carl, Mark, Billy, John, Stephanie. Wow. Social media is rocking today.
It's the 6-year anniversary.
I mean, everybody
They're
wants
all
a
over
piece,
it.
son.
They're all over it.
One minute.
All right. Mary Kemp, what's going on, young lady? Tell that husband of yours I said happy birthday.
All right, 15 seconds.
10-4.
What's cooking?
Sometimes his voice cracks when he does that.
Yep. All right, here we go.
What's cooking, Gumbo Nation? You're listening to Mortgage Gumbo, Dwayne Stein, right here on iHeartRadio. And I'm your host, Dwayne Stein, the Gulf South Mortgage Authority. And if you want to join the show today, 504-260-0995, or you can shoot an email to info@mortgagegumbo.com. Hey, go sign up for the weekly newsletter, The Roo at mortgagegumbo.com. And look, just look for that chef hat in the sky. You know where to find us. I'm not going to list all that stuff out right now. But, hey, today I'm super excited. Today is our birthday, so to speak. It's our 6-year anniversary or birthday. The birth of Mortgage Gumbo was born on this day 6 years ago. So, you know, shout out. Got to thank all those people that's been part of this over the years. And, you know, Beth Dockhand, Tori, my boy Dave, who's producer, Angie, who's been part of the show, Sam, who's the most recent addition. But none of this be possible without my man Greg Ricks. I'm sort of his Laverne and Shirley to the he's the Fonz over there, and Parker's Richard Cunningham. So thankful to them, but super excited. So we'll kind of go back, and we've got some information to discuss when it comes to 6 years ago when we started this show. But the one thing the show has taught me is, number one, we've done over 250 live shows. Okay, so that's pretty exciting there. But just the importance of being philanthropic. You know, we've raised thousands of dollars over the years for different events. Last year was Help a Hound. We've been part of so many different things out there. Children's hospital events, partnering up different agents for things. But also
the Toys for Tots.
Yeah, the Toys for Tots. We have collected, 1,500 plus toys with that. Last year alone, over 500. So that has just grown. Stinks that it looks like this year. We can't even, the venues don't even know what to do. So we're probably going to bring that and maybe do a Toys for Tots for Easter. Good news yesterday announced was, Phase 3?
Whatever that means.
Whatever Phase 3 means. I think it means maybe masks are now optional. Maybe restaurants.
Increased capacity for restaurants. I believe they're up to 50%, which no one's following. I was out to dinner last night. Every seat was taken. So restaurants really aren't buying that. I know businesses are paying the fine if they get reported. They're kind of just like, we're opening up because if we don't, we're going to shut down and we're going to lose our business. So we're going to open, we're going to make the sales, and you're going to fine us.
Yeah.
Hopefully bars get the opportunity to reopen and do something. They're dying. I see it. I'm affected by it personally with my family's business. So maybe if they give them a chance at 25%, we'll see. So that's kind of the interpretation. I think movie theaters are maybe back open with some limited capacity.
Which is kind of crazy to me. How can a movie theater be open? Now, I'm not a movie guy, but how can a movie – that's a closed box. Almost like this office. We're tight-packed. We got surround sound everywhere. So, but yet a bar can't, where it's a little bit more breathable. But that's crazy. Listen, here's what I kind of know for Phase 3. Football. High school football, it looks like. So, my son we found out yesterday. So, hey, the voice of the Titans is back. Titan collar. So on Friday nights, that's where I'll be doing that. So that's kind of good.
No, absolutely. I mean, they're going to allow, I believe, 25% of fans in Tiger Stadium. Saints fans won't be there week 1 against the Bucks, which kind of sucks. But starting in week 3, they'll have limited fans allowed. So they're kind of starting to bring it back. But Orleans Parish is staying in Phase 2. Yeah. The mayor is keeping them in Phase 2. So that kind of really hurts the bar industry down there. But, I mean, what can you do? If your elected politician chooses it, then that's what
look, we don't want to make this a political show because, my gosh, I know everybody and their grandma has got opinions, and I definitely do. But, so, look, at least we're heading in the right direction. Right. So, I mean, kudos to Edwards putting us at Phase 3. So, do want to give a shout-out. Hey, my boy, some of y'all, try to kind of keep y'all doing the journey here. But my son, Gavin, tried out as a freshman and was fortunate enough to make, Lakeshore Titans, many of you know if you follow football, they're a prominent contender every year for the state championship. Last year, Christian Westcott, who was Gatorade Player of the Year, who went on to scholarships in college. But, so as a freshman, he made the varsity team. So super proud of him and a couple of his boys as well. So good stuff there.
Yeah, huge congratulations to Gavin. That's a big achievement as a freshman.
Yeah, so that's
making the
awesome.
varsity.
So, but, the other thing is it's September. So what that means for you as the listener, that if you're engaging in contracts right now, if you're thinking about purchasing a home, if you're thinking about refinancing, what that means for you is you are going to get to your first payment is not going to be all the way out until December, right? Because if you're writing a contract this month, we're going to wrap you up next month, and that means you're not going to have to make a first payment all the way out until December 1st. So when you start thinking about it in the world that we live in, right, with the deadlines, the guidelines, and then add in just the absolute, I mean, we are stretched to the limit right now with the amount of volume. And, we're flipping out because our average turn time is under 18 days, and right now we're at 21. and we're like, oh, my gosh.
Everything's sitting. It's taking
oh, my
so
God,
long.
this is horrible. But it's really – there's nothing you can do because we've hired as many underwriters as we can. We've got the processes in place. So the good news is, listen, make sure – those things, that's exciting for you. So a lot of you, when you start writing contracts next month in November, your first payment's not going to be to 2021. But keep in mind, okay, there's black clouds out in the distance, and that is that funding, that is that raise in the rate, right? That finance fee. The Fed took it away, but it's coming back December 1st. So that means automatically higher rates. So for all my fellow procrastinators out there, man, you have been winning. You have been knocking it out the park, right?
Rates, ninth time this year, hit an all-time low this week.
That's what I'm saying.
Yeah, if they're sitting, but this is like the prime time because once that fee hits, it's not going back to where it was.
It can't.
It can't get any lower than it is right now.
That's right.
This month to November 30th will be the prime time to go. And if you wait past that, you're going to get affected.
That's right. You've got to be locked in by then. So to all my procrastinators, share. Let them know. Mortgage Gumbo said the low rates, the all-time low rates, not that, hey, it's the world's going to come to an end, will be changing when we start looking at this in December 1st. So, listen, can't go without what yesterday was great news on phase 3, but just 9/11. I know everybody listening. I know me. I can remember where I was. It's just one of those days. And, I'm really hoping that we never, ever have anything like that on our soil again. But, man, just something has to bring, and I know I'm not going to get political here, but something's got to bring this country together, Sammy. And I know you were, in high school maybe?
9/11?
Yeah.
No, I was 4 years old.
4 years old. Okay, I'm sorry. So
I was in high school when the show came out.
My bad.
Right.
So there was just some unity, and I'm really just every 9/11 I can just remember at the time I was working in corporate America, living in Florida, and I could just remember people cutting me off on the interstate, and when I would usually road rage them just so I could practice my digit extensions, I didn't. I was like, you know what? Hey, who knows? So maybe we'll get back to that. I'm hoping we obviously don't need those kind of events, but something's got to bring us all together, and everybody just be nice. So let's hit real quick a couple things here. This past week we had our monthly All About Credit webinar. Listen, sign up for this. Go to mortgagegumbo.com. Go to mortgagegumbo.com and sign up for these events. They're every single month. The first or second week of each month is our home buying webinars and our All About Credit webinars. You get to do it from the comfort of your own home. Your boxers, your underwear, your robe, stay in your suit, pull the tie down. You get to do it from the comfort of your own home right now until these things start to open back up. So really good stuff when it comes to that. So, make sure that you are checking that out. So, but today we are going to be talking about private mortgage insurance. I know for years we've talked about it as a 4-letter word, but today we are going to do soup to nuts, A to Z. We are going to break down PMI like it's never been broken down before. I want you to understand, I talk to people daily, and so many people think I can't buy a house because I don't have 20%. I can't refinance my house because I don't have 20%, or I have private mortgage insurance. We're going to debunk a lot of the myths, and I'm actually going to tell you how you can use PMI as a wealth building tool. So on the other side of the break, we'll get into that. We'll cover Rate Watch. We got a few little facts about, hey, what went on 6 years ago, and then we'll get into our topic today, which is PMI. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio, 504-260-0995.
All I want for my birthday is a big booty club. When I die, bury me inside the Gucci style.
Why do we have to have another damn hurricane in the Gulf?
I know, man, huh?
Seriously. What the hell?
It's crazy.
Yeah, we have to come back into work again. It's crazy.
Right.
The Roaring Twenties is not off to a good start.
I guess, are they going to just, I don't know, ban something so that we can just start bootlegging it, whatever it is?
Yeah.
Let's get rid of nicotine or something.
Right.
So are they, what's it looking like? It's going to get into the Gulf?
Yeah, that's what I'm looking at.
Looking
Channel
at it
6 right now.
Great.
Yeah, it looks like it's going to come right up at us.
Right
for some
at
reason.
us. Yeah, it's going to go over the tip, huh?
Next weekend?
Awesome.
Next week?
So it's a tropical depression.
Like Tuesday.
Right now,
No,
right?
Tuesday.
Oh, wow.
Yeah.
Yep.
Work from home all week. Not messing.
Yeah, we're basically going to be wet for a week.
Yeah, that's what it looks like.
And the Gulf, Africa, the coast of Africa just keeps on spitting out more
just,
hurricanes. It's like,
yeah.
like 3 or 4 more out there.
Right. It's like it had a bad lunch. It just keeps throwing these things out, Oh, yeah.
But every day I look up out the window, there's rain. It hasn't, I feel like every third day, if it doesn't rain, something's wrong.
Yeah.
Summer showers, 2020 showers, rain.
Maybe this is the great flood. This month, it's always, we had murder hornets. We had all these.
Right.
Every month it's something different. So maybe it's Noah's Ark. We got to start building an ark now. What are rates on houseboats, Dwayne?
Yeah, right. Exactly. Yeah.
You might have to broker
Good news,
that one
boats.
out.
You can now you can do 12-year terms on boats.
All right, 1 minute.
Little left. You gonna watch Burrow on Sunday?
10 seconds.
Welcome back, producer extraordinaire, my boy Dave DeCorbier. He's jamming up with a little happy birthday music. Thank you for joining us. It is our 6-year birthday. We're 6 years old. Mortgage Gumbo has been bringing you education and options now for 6 years. This segment's brought to you by The Fence King. It's a division of Dan Blanc Services. Visit needafence.org. That's needafence.org. 20 years experience. Guy puts his guarantee on the fence. He's got hundreds of 5-star reviews. No high-pressure sales when you use his virtual fence designer. Right there on his website. That's The Fence King, needafence.org. So, hey, let's talk about real quick. Our topic today, you're going to want to stay tuned, is all about PMI, private mortgage insurance, okay? We've affectionately called it a 4-letter word in the past. But a couple things here. Since it's our birthday, we've got some facts out. Gas in 2014, hey, this is something that's gotten better. Gas was $3.37 when we started the show. Average gas now is $1.85. Some social media that was started, not started, but was around. Facebook, Snap, LinkedIn, Twitter, all those are still around. So pretty cool there.
And they're bigger now than they were before.
Absolutely. Interest rates, which we'll cover Rate Watch in a little bit, but interest rates, a 30-year was at 4.04%. A 15-year was at 3.21%. FHA was 3.75%. So you're going to see some drastic differences. And really, everything is over 1% cheaper now than it was back in 2014. Average home price then, $200,000. Now, $313,000.
Wow.
That's up 55%, man. That's tremendous,
that's a
right?
lot.
So, Louisiana, average median sales price $154,000. is now at 174. Mississippi 114 is now 120. Alabama 137, 147 now. Florida 185 is now 299. And then circle back to our friends to the west, Texas 194 and now 269. So that is why today we are going to be talking about private mortgage insurance and why we want you to stop renting. Stop renting. We're going to go over, we're going to dial all those things in. And you were saying there's a couple bits. What else kind of came out?
Smartwatches came out in 2014. So Android had the first one in January, and then Apple came out with the Apple Watch Edition 1 in the fall. And then Uber kind of changed everything. That changed the whole landscaping, kind of killed taxis. So that was people were ethical, like, is it okay to get in a stranger's car and pay them and stuff like that? But no, Uber's stood the test of time. They've actually had competitors come up like Lyft and other ride-sharing apps and stuff like that. But those two definitely came out in 2014.
Hey, some good births there, all in the same year of Mortgage Gumbo. Let's get into our weekly segment we like to call Rate Watch. So here's where we're at. 30-year conventional, 2.87. We just told you 6 years ago, it was at 4.04. My gosh, that's 1.25% cheaper. 15-year, 2.38 versus 3.21 back in the day when this show started. FHA, 2.38 today was 3.75. Jumbo, 3.48. VAs continue to be in the mid-twos. And the the 5-1 ARM is at 2.78. Again, why would you look at an ARM? And I have people out there selling them. And they call me, and thank goodness they get to me and take advantage of our free second review. Okay? So since last week, rates, 2.91. 2.87, 15, 243 to 2.38, FHA 245 to 238, Jumbo 353 to 3.48, and a 5-1 ARM 2.81 to 2.78. So again, when it comes to interest rates, please trust me, we have never seen what we're seeing right now. Procrastinators unite. You have won. I have people calling me back from April, and they're getting, guess what? They're getting a quarter to 30, 35 basis points cheaper rate. This is all going away, no matter what. This is all going away December 1st because everybody flipped out a couple weeks back when they put in that fee.
Right, September 1st when the fee rolled out.
Right, because when that fee rolled out, all of it, well, it was supposed to roll out. When they rolled it out, rates went on August 8th from 2.82 to 3.14. Basically overnight. Overnight.
And lenders weren't prepared for that because they had so many loans that they were exercising, and then they had to hammer all their clients.
Well, and the government said, here's what it is. It's going to roll out September 1st, so if your loans aren't locked by then, and lenders still, a lot of investors have, I don't want to say sort of handcuffed us, but they want to make sure the old days of just being able to get an app and lock a person, that's not out there. Now, we can lock loans a lot quicker than everybody else because we have something that a lot of folks don't have, and that's called liquidity. Okay.
I wanted to touch on that before we got into private mortgage insurance because you were talking about turn times and stuff like that. Ours are 22 days, 21 days. Well, competitors, I was looking at their charts, they're 45 to 60.
Right.
And then the liquidity is down 33% since Corona started. So many lenders can't even give you a loan. They're actually closing off and saying we can't lend till 2021.
Yes.
Well, that's not the case for us. But some people you can't even get a loan because there's no money out there.
So the ones that can, you have to make sure that you know who you're dealing with, right? I had somebody call me this week who told me they are getting a 30-year conventional, 2%. And I'm like, I can't even buy the money at that. I couldn't give myself that, even if I wanted to pay 3 points. So you've got to be careful because everybody doesn't follow stringent guidelines. And a lot of these lenders are not going to be able to get you closed. And do I like that our closing times are longer than what they have been? No, I don't. And listen, just like I have to answer that bell when my clients call and go, hey, are we going to be able to close? I get it. I totally understand. And that is your right, because especially when it's people that we helped a couple years ago, they're used to doing a refinance in 15, 18 days. And here all of a sudden, even with purchases, agents, do your lenders a favor. Don't write 30-day contracts. Write 45-day contracts. Okay? And if we close early, then that's awesome.
Right.
But, I've got somebody that right now they wrote a contract for the end of September, and they brought in taxes on Wednesday. It's not going to happen. It's not going to happen. And you've got to let them know that. So you've got to make sure that you're setting the right tone also for people. But it's because it's a great thing. But I can also tell you this. There's a lot of lenders out there. A lot of lenders out there that are not lending right now because they can't.
They simply don't have the money.
They don't have the money. And what we mean by liquidity is this. Mortgage Gumbo, we have enough money that our holders, our financiers, we're liquid. That means if Joe A calls us and wants to do a $500,000 loan, and Joe B wants to do a $150,000 home, and Joe C wants a $300,000 loan, there's $1 million in loans right there. We can close all of those loans. Whereas Schmuckatelli, okay, bank, brokers, etc. And listen, I could sit here and I'm not going to give them any kudos. I could tell you some of these lenders, and you've heard of them. They're still advertising on TV, which is amazing. They have no money to lend, yet they're still advertising because they want to try to keep market share. So these folks, what that means is if Joe A gets a $400,000 home loan and they only have $600,000 to lend, well, that $300,000 home from Joe C, we can't give it to him until one loan closes or another one pays off. We've got to get money back in house. So that's why some of you, if you're wondering, why is it taking so long? Your lender's just not being straight up with you and letting you know straight up, we ain't got the money.
They're kind of tying your hands and not telling you because.
Correct.
Right.
And so many agents are calling me going, can you take this? You saw before the show. Hey, this builder now all of a sudden saying their lender can't do this or that. Can you help me? Right? They're a week from the contract. And all of a sudden now the lender is like, sorry, we don't have the funds on a loan that is supposed to be closing next week. I mean, you just saw that come across on Instagram.
And you'll be able to help them, but not in a week. We're not going to close them in a week.
That's right.
So they're not going to hit their contract date.
So then what happens, just like the guy who got 2%? I said, go ahead. Go. I said, I wish you the best. You'll be back. That was on Monday. By Friday, luckily, he kind of was thinking about it, started doing some online reading about the person that was online and all this stuff about this lender. But so many folks like this poor client, you think they had plans to buy a house, keep renting, or keep doing, and I don't even know what their situation is. But we'll get it figured out for them. But the bottom line is a little too late, too late? I mean, nobody. Listen, we don't want to miss contract dates because we know it usually ties up multiple things. If Sam's buying Dwayne's house, Dwayne is probably moving somewhere else, right? Mm-hmm. Buying another home.
It's a chain. It's a chain reaction if you don't hit the first.
It's very rarely one person. It's very rarely you got somebody that's going, all right, I'm selling house A to move on.
Well, we had a closing on Thursday. It was 4 houses that it affected. So
4.
we had to get the first one for it to be able to hit 4. the chain reaction.
Yes. And this guy broke one of the 10 commandments, but we still made it happen.
We still saved it.
Because that's what we make dreams come true. Hey, you're listening to Mortgage Gumbo. On the other side of the break, get your notepad out, get your pen. It's going to be fast. It's going to be furious. I mean, it's such an exciting topic. I mean, who wouldn't want to learn about private mortgage insurance. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio. Give us a call, 504-260-0995.
All right, 4 minutes.
Thank you, brother. What up, Jacko? Thank you, Kathy. Appreciate it. What's up, Jacqueline Chauvin? Tell Jen and John I said hello. Oh, yeah, and your dad. Tell them I said, what's up? Not yet. Save that.
That's the most I've seen, though, with, like, getting the point, the difference.
So Jacko's watching.
Jacqueline, good morning. You need to come stop by and see the new office.
She's big time.
What's she doing now?
You still in Kansas, Toto? That's right. Dadcom.
Did you start that when the show started? Like, that's how you began
I did
it?
it messing with Parker one time, and it goes, never not do that again.
That's funny.
Texas. Where at in Texas? What up, Beth Darkan? Gave you a huge shout out when we started. Hope you heard it. Can't thank you enough. 6 years because of you, young lady.
All right, 1 minute.
You like that one?
Ten seconds.
Welcome back. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio, joined by Sammy, the intern, in studio. We celebrating our 6-year anniversary. Shout out to everybody that's joining us on all the social media sites, throwing in some happy birthdays. I appreciate that. Second segment's brought to you by Bienvenue Plumbing and Repairs. BienvenuePlumbing.com. 3 words: reliable, professional, affordable. Over 20 years experience. This guy's built his business based on reliability, professionalism, and affordability. licensed and insured. Make sure your plumber's licensed and insured. He's the Paisan of pipes. Visit bnvilleplumbing.com. So let's get into our segment this week, which is it's not our segment, our main topic, which is PMI, private mortgage insurance. First off, mortgage insurance, PMI, has to do with a loan. This is not that after you do a refinance or a purchase, that letter you get from that fake company trying to sell you life insurance, right? So what is PMI? It is called private mortgage insurance. It is a insurance on your loan when you have less than 20% equity, okay? When you have less than 20% equity. So what is its purpose?
Well, real quick, Dwayne, explain the 20% equity. What does that mean? Does that mean that you have the house is worth a certain amount and you've paid into it a certain amount, right?
Or when you purchase, right. So at the time that you're doing your loan, right? At the time you're doing your loan, if your house is worth $100 and you owe anything over $80,000, you're going to be required to have private mortgage insurance, okay? So what is its purpose? Listen, its purpose is to protect the investor. This is how they insure themselves to make sure they get insurance against you in case you go bad. They want to make sure they are protected. So in essence, they are hedging their bets that you will pay. And because you're saying, oh, I promise to pay, but you don't have the cash to prove it, they go, all right, cool. Pay for this insurance then. So it has nothing to do with, it's not a homeowner's insurance. It's not a insurance that protects you in the case of death or anything like that. It is strictly an insurance that protects your investor, okay? So what PMI does, because I've poo-pooed on it for a long time, and I don't like it. And that's why my team, we've been taught and coached, and I've taught all my folks to do everything in the world to do loans without private mortgage insurance. And we're going to break that down in a little bit. But PMI allows the investor, okay? It allows us to lend with confidence because risk is minimized. Because I now know I have this insurance, okay? So that is why if you did not have PMI, you would basically be dealing with what a lot of the banks require, the Smuckatellis out there. Well, if you don't have 20%, I can't help you, right?
I can't tell you how many articles I read that the only way to buy a house is with 20% down. Like that's what everyone said. It was you to get rid of PMI, you have to have 20%. You have to have 20%, which simply is not true.
It's just not a fact. It's not a fact, and that's why we're here explaining this to you. So with that being said, I want you to understand there are two types of mortgage insurances, okay? And I'm trying to go at a good pace because I know y'all jotting it down. Or if you record me, hi now. Alexa, set radio to Mortgage Gumbo. All right, got you there. So if you are recorded. So two types, private versus non-private, okay? Not nine, N-I-N-E, non. Sorry, it's a little Chalmette on you. So there's two different types. Private is conforming. That is your conventional loans. Non-private is your government loans. That is when you have mortgage insurance on FHA, RD, and also VA, okay? So let's break that down for you because I want you to understand when you're going in to get your home, I want you to kind of understand what you're getting into.
And real quick, those are mortgage insurance is required on the government loans.
Absolutely mandatory.
Right. There's no FHA loan you're going to do without mortgage insurance.
None.
Every VA loan okay.
Yep, absolutely. So that's a great point, Sam. So FHA and RD, both of these, you're blessed enough to have two mortgage insurances. You have what's called the upfront mortgage insurance that goes on top. So what that means is on FHA, the upfront mortgage insurance is 1.75. So if you're buying a $100,000 house, you're borrowing $101,750. Okay? But it also has, on the back end, the monthly on the FHA is, if your loan to value is more than 95%, it's 0.85 of your loan amount every single month. Okay? If you put down more than 5%, then it's 0.80. And I'm not going to get into, we'll do a show. Matter of fact, write that down. We're going to do a show, FHA versus conventional, right? So the other thing about FHA and RD, they're on the loan for life. If someone tells you that's not true, they are fibbing. So unless FHA, just so you know, if you want to quiz your lender you're working with right now, the only way that FHA can come off is if you put down 10% or more. And then it's after 11 years.
So the listeners, so they can understand the amount of mortgage insurance monthly on an FHA loan, if they put down 3.5% and their LTV is higher than 95, their monthly mortgage insurance would be $85.
That's right.
Right?
That's right.
So 0.85
of
the
correct.
loan amount. So if they borrow 101, their monthly note would be about 87.
So you've got
for mortgage
you've got
insurance.
private mortgage. Exactly. So, all right. So let's look at RD. Now, RD is a great program if you're buying in a rural development area, okay? But RD has a 1% upfront, but only a 0.35 on the back end, okay? So only a 0.35 on the back end. All right? So FHA, RD, again, both of them, the life of the loan. VA does not have PMI. They change it. And they call it a funding fee. Okay? Now, with VA, we're not going to go through because it's all based on eligibility and all those types of things, if you're disabled and all that. But VA does not have a monthly, which makes it phenomenal. But they do have the funding fee up front that is on top of your loan. Okay?
Which can be pretty big, 3.6%.
Absolutely. It can be gigantic. Okay, so keep that in mind. Those are your non-private, your government. Let's talk about your conforming, your conventional. Okay, so this is where when I look at a loan and when I'm having my people discuss, we are always trying to see if we have an option. If somebody's going to come to me and has 5% to put down for FHA, we're going to look at conventional for them. Okay? Because we know the house, they've got a chance to get out. Now, if their credit score, if their debt ratios and all that don't work, then we look at FHA. But you know, as listeners, for 6 years now of us bringing you education and options, you now know that FHA is the loan of last resort for us. Okay? It's the loan of last resort. But FHA sure in the heck beats renting. So when it comes to a conventional loan, this is non-private. There are companies out there that offer private mortgage insurance. This is where the word comes from. Okay? With conventional loans, if you have mortgage insurance, it will automatically fall off once you get to 78%. Okay? There's different ways. Contact your lender if you think you're there right now. Contact your lender and find out what do you have to do to have your mortgage insurance removed. More houses than ever are now not underwater. More houses than ever now have more equity than they've ever had.
Right. But
Okay?
chances are you can call us. We can refinance you with a lower rate and get rid of it altogether.
Absolutely. And take advantage of these rates. So if you are so some of those things, what I'm going to look at, for instance, is, hey, if you're a first-time home buyer, you get to take advantage of 3% down. And maybe mom and dad's giving you a gift, or you've got a few bucks. Well, instead of putting down 5 to 10%, we may have you put down 3% and buy out your mortgage insurance. Those are options there. So when it comes to mortgage insurance, you can do what's called buying out. Yes, buying out. So we will talk about that because I want folks to understand. So many people say, well, if I don't have 20%, I got to have private mortgage insurance. You do not. So we're going to touch on that when it comes to refinancing on the other side of the break. You're listening to Mortgage Gumbo with Dwayne Stein, celebrating 6 years of education and options. Cannot thank you enough. Give us a call, 504-260-0995.
Take trips for your birthday, baby. Hey, love it when you walk that way, baby.
Hey, what's happening? Jay, Darren, Beth, Mary, Regina, Barbara, another Barbara. Rocking and rolling today. Thank y'all so much for hanging out with us on social media. Get into that could be a question like next week somebody heard, you know what I'm saying? If we got time, we'll roll with it.
Right.
But I want to use it. I want to get into the wealth. I want to talk about refinancing.
Hey, we got 2 callers. I'm getting their information now. I'll text you both of y'all the info for the callers.
Okay.
We got 2.
Thanks.
No, there you go. Coming on, huh? The callers are going to come on.
All right, we got Tom in Harahan and Wayne in Slidell.
All right. Any idea what they want to chat about?
The PMI stuff.
Okay.
Tom.
Happy birthday to you. Happy birthday to you.
Hey, we're celebrating 6 years on air. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio. And we're talking about private mortgage insurance. This segment's brought to you by Supreme AC and Electric. Jody and Jeff bringing 30 years experience to the entire New Orleans metro area. Supreme AC and Electric can handle your commercial and residential needs. On the South Shore, 504-812-7193. On the North Shore, 985-773-9983. Hey, let's go to Tom in Harahan. He's got a question for us. Tom, how can we help you?
Hey, how we doing today, gentlemen?
Fantastic. Thanks for calling in.
Good. Hey, I've got an existing mortgage. It's around $69,000. I've got 15 years left on a 30-year mortgage. Rate somewhere around 5 and 5.5, or maybe a little more. House is probably in a $350,000 to $400,000 range.
Okay.
Okay, I was thinking, refinancing and, how beneficial would that be?
Well, here's what I could tell you, Tom. Because right now, we obviously don't want to go over your personal stuff on air, right? So what I would highly recommend is visit, like so many others are, visit snapsendandsave.com, snapsendandsave.com. Basically, with that rate, with that balance, there's some things that we can definitely do for you to lower that down for you and even show you how to get rid of it in a lot shorter term. Or see, hey, maybe there's some things. If you're 15 years in on a 30, you've probably been in that house for a little while. But let's chat about that or call me doing my day job, 504-207-7600, Mr. Tom. I just don't want to – there's a lot of personal information you have to get into it, my man. But thank you, Tom. I appreciate it, my man. Thank you, buddy.
Thank you, Tom.
All righty.
All right.
Thank you, sir.
All right. Let's go to our next caller, Wayne in Slidell. Wayne, how can we help you out? Wayne?
Shows he's there.
All right. So, hey, let's get back to we'll see if we can get Wayne on the line. If not, that's okay. So, couple things. We're talking about PMI, and we're mentioning, hey, when you're purchasing, but let's talk about refinancing. So many people do not know that we can refinance. I don't know what anybody else can do, but I have investors that when you hit 90% equity, we can buy out your private mortgage insurance. We can do a refinance to get rid of your mortgage insurance. And so many of you, even last year that bought a house or refinanced last year and you're sitting at that 4.5, 4.875, heck, 4.25, 4. We're showing people how refinancing and buying out their mortgage insurance by financing it into their mortgage is saving them the minimum of whatever their mortgage insurance is, which is hundreds of dollars a month on most parts. So we're not only getting rid of that, and now more can go towards principal. So I want folks to understand, PMI, there's options to get out. A lot of the refinances we do, a lot, okay? More than 60% of houses in the country have mortgage insurance. So there's a lot of you out there. So it's hard for me to believe that mortgage insurance is a bad thing when we talked about earlier, what's its purpose to insure? That's 60% of folks, and the number used to be a lot higher, 60% of folks who now have houses that if they didn't have mortgage insurance, we can all but assume wouldn't be able to be homeowners.
Right. And we're talking about refinancing with mortgage insurance. One thing that you do all the time is you refinance FHA loans into conventional and you get rid of it.
Yeah.
That's that's a very easy way to save $200 a month just that.
Just immediately. Absolutely. So if you're 4% or higher, visit, like I told Tom, visit snapsendandsave.com. snapsendandsave.com. Hey, we got Wayne back on the line. Wayne at Slidell. How can we help you, bud?
Yeah, I got a question about this new development here in Slidell, 2,500 homes on the east side of I-10, developed by D.R. Horton. They're telling me that they don't have to buy flood insurance in that area. That sounds like something that somebody set up. That don't sound honest. How could you buy a home in there? How would somebody finance a home in there without flood insurance? Do you know?
No idea. No idea. Here's what I could tell you about. Here's what I could tell you about those builders. Be careful, because they build a bunch of properties very quickly, and the values never go up. There's only one winner when these big national builders come in and develop these subdivisions like that. It is never a good thing, and people suffer all the way through. But, Wayne, no, I really I would have to look into that. But if you're in a flood, everybody, and let's chat about that real quick, because I'll give you that. There's not a person listening. There's not a person in the entire United States that's not in a flood zone. Just different flood zones require you to have it, and some don't. So, Wayne, I'll look into you, but you're spot on there. Trust your instincts. If you're in a flood zone, you're required to have flood insurance. There's no, hey, if you buy from us, you don't have to have it. Now, they may be making part of their deal where, hey, we'll pay you first year or something like that. Who knows? But, yeah, be careful there. I'm definitely not buying that.
Into that, what I think may be going on is a scam.
Yeah.
Because if these folks that are buying these homes and they're selling like hotcakes,
yep,
if they don't have to pay flood insurance, which will be a big hit, then they're reducing their amount of monthly payments, and they can sell these homes quicker. It sounds like a scam to me.
Yeah, I agree with you there. I'll look into that, Wayne. I'll try to find out about that, and I'll get back on if there's some truth to that matter. We'll definitely look into that. I appreciate you calling in and making us aware. Thank you, Wayne. Appreciate that, sir.
Thank you, Wayne.
All right, so getting back to PMI, I want to do something a little bit different here. I want you to look at PMI as a wealth-building tool. Wait, what, Dwayne? PMI? How can I make it a wealth-building tool? Well, since 2015, if you bought a house that was $150,000, it's now worth $170,000. So in 4 years, right? 15. This is through 19. So in 4 years, you're up $20,000. Okay? So that's $5,000 in equity you built in money.
Right.
Okay?
$400 a month for 4 years.
That's a great way to look at it. So even with inflation, that's $5,000. Okay? So that $150,000 house is now going for $170,000. So $5,000 a month. So let's say that you went in and you bought that house. You would have a mortgage insurance of $95 a month. So if you multiply that times 12, which is how many months are in a year for some of us slow learners out there, that's $1,140 a year. Okay? You go multiplying that times 4, that's over $4,500 in that same time period. Okay? So you are winning by, you're now plus over right at $16,000.
2 minutes, too.
You're plus $15,000 to the good. Now, what if you bought out your mortgage insurance? That same house, if you bought out that mortgage insurance, would have cost you about $4,000 to $4,500. Let's take the high number. So now that $20,000, if you paid that $4,500 to $5,000, you're now $15,000 to the good. Whereas if you're renting right now, the average rent in New Orleans metropolitan area, okay, is $1,700 a month. Let's just say we took $1,000. In that same time, you paid $48,000. So you've lost $32,000. So stop renting. Stop renting. We have PMI toolkits. We can show you when, where, and how to get rid of it.
1 minute.
So give us a call during our day job, 504-207-7600.
So essentially, Dwayne, the way you just explained it is it costs $95 a month for the mortgage insurance, but your home's appreciating at $400 a month. So you're plus $300 each month since when you bought the home, and that beats renting every time.
Every single time. So let's look at PMI. Let's stop being mad at PMI, and let's use it to your advantage.
30.
To make it a wealth-building tool. Appreciate it. Thanks. 6 years, Sam. Thank you. Dave, thank you. Everybody that's been part of this growth, bringing education and options for the last 6 years. Hey, 11 o'clock, I'll be hanging out with Gregory Ricks. Till next week, Gumbo Nation, keep stirring the pot.
Clear.